Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live rates and we're going to do a deep dive into DSCR loans. We'll wait just a minute to get started here. Let us go live on all the different platforms. Give everybody a chance to tune in here. We put the chat up on the screen, so feel free to drop a comment there as you tune in. And we'll get started here momentarily. Happy Friday, everyone. Hope everyone had a great week so far. We'll get started here in just a moment. Great topic here today that we're very fond of at the Mortgage Calculator, which is the DSCR loans. Feel free to drop a comment there in the chat as you tune in. I see people are already dropping comments there. Warren, Owen, Annette, thank you. Caesar, appreciate it. Thank you, everybody, for tuning in nice and early. April, appreciate the comment there. All right. Well, it looks like we are live on all the different platforms, so we can go ahead and get started. What we'll do is we'll take the chat off the screen, but keep dropping comments there in the chat as you tune in, and also feel free to drop any questions you have in the chat as well as we go through here today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates of a few different programs. Then we do a deep dive into a different loan topic every day. Today's loan topic is something that we specialize in here at the Mortgage Calculator, which is DSCR loans. That's our favorite loan, definitely our most popular loan type, because we specialize in non-QM loans and investor loans. And DSCR is definitely the most popular investor loan out there right now and our most popular loan product. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive into DSCR loans here momentarily. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through the live rates for today. Interesting to see how it's going to look like this morning. So Nick, if you're ready, let's go ahead and pull up the pricing tool and see what the rates are looking like.
Alrighty, already getting some emails about rates changing already this morning, so we should see some activity here. Let me switch my screen and we'll check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR for today. It is November 17th, just after 11 a.m. Eastern. Most of our programs are live, and as I mentioned in my email here, some of our programs are even repricing again today, and it looks like improvement, so it should be a good show today. If you'd like a full breakdown of all the fees that go into the APR, a full itemized loan estimate, please get with our team members. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our DSCR loan, the topic for today, in 44 states. For all our demos, we'll set up the same scenario so we can compare apples to apples across the programs. So we'll set a $400,000 loan amount for all the demos. We'll set 80 LTV as a loan amount, 20% down payment. We're going to search for the absolute lowest rates we can offer, which is typically the request right now. And we will compare conforming conventional programs to FHA, which is usually the second option for most customers. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs most banks or lenders don't have. We also offer VA. That's only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. And we also have USDA, but that's only for USDA eligible properties. If you do happen to be looking, just let us know. We don't quote those live since not everybody is eligible for those programs. We'll start with conforming conventional here. We're going to do purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county Miami-Dade. And for all the demos here, we'll use an estimated credit score of 760 and an estimated debt-to-income ratio of 40. So with these settings, as we do every morning, let's check out the live action. It's still pretty much about the same as yesterday. Hopefully we see some more repricing today as the day goes on. 6.75 rate, 2.5 discount points and costs. APR still under 7, which is amazing. It's been much higher, over 7 for the last few weeks. So 6.967, finally the APR just below 7 here for our conventional options. Now, if for any reason our customer doesn't qualify for a conventional option, typically the next option we want to look at is an FHA option. So we'll set up everything exactly the same, and this time we'll check out FHA. FHA does allow more leniency on credit events and credit issues, as well as a much higher debt to income ratio, but we're going to keep everything exactly the same so we can compare apples to apples here across the programs. And best option for FHA this morning, 6% rate, 2.375 discount points and costs. Put the final APR at 6.639. I believe that's about the same as it was yesterday as well. So that is a little bit cheaper than conventional. So our customer that qualifies for both, definitely check out FHA. It could be a touch cheaper as it is in this example. And remember, this APR does include the upfront and yearly mortgage insurance. So this is a good option for our customers that must use FHA programs. So definitely don't overlook those. Now, where we love to specialize and where other banks or lenders cannot help our customers if they unfortunately don't qualify for conventional or FHA using their full doc tax returns. So most other banks or lenders will have to deny them. We have over 5,000 additional options here under expanded guidelines. So we'll keep everything else the same, but now we have some new options that pop up here for income verification. If our customer doesn't qualify for full doc, which is 2 years of tax returns, which is what we use for FHA and conventional, we can use these expanded guideline programs to take advantage of an alternative income. We have asset-related programs, business bank statement programs. The investor DSCR program is just for investment properties. We're going to do a deep dive later today on that. Personal bank statement 12-month is what we use for the demo. That's the most popular. We also have RSU, stated income, DOE, 1099, P&L, and no income CDFI. Tons of different options. The most popular here, though, by far, for our self-employed borrowers is the 12-month bank statement program. Many times our self-employed borrowers have some trouble when they submit 2 years of tax returns. They may have various write-offs and may not quite get enough income. We will solve that problem. No tax returns at all, just their last 12 bank statements. And using the cash in their last 12 bank statements, we determine a debt-to-income ratio. So most of our self-employed borrowers will qualify for much more income. And in this example, we use 40% DTI as the estimated income using the bank statements, not the tax returns. So with these options, let's check out the bank statement options this morning. And best option at the top, 7.5 rate, 2.5 discount points and cost. Final APR, 7.617. So a little bit higher than conventional, which is normal, right? We were beating conventional for a while there, which was abnormal. Now the bank statement is a little more expensive, but still very similar in cost. It's about just about 0.6 higher, it looks like today. So great options here for our customers that need that flexibility. And now let's go to our topic for today, investment properties. Obviously, Jose is going to do a deep dive into DSCR. But first, let's check out the live rates for investments like we do every morning. So we'll set up the same scenario, ADLTV. And we're going to look for the lowest possible rates for our conforming conventional investments and compare that to our expanded guideline programs. All the government programs, FHA, VA, USDA, are not eligible, so we can skip over those here. Start with conforming conventional. Keep everything the same as all our other demos. The only thing we've changed here is the occupancy. So now that the conventional programs have relaxed, we have some cool options here. Let me scroll down and see where the portfolio keeps going down and down. And just as I say every morning, this portfolio option, which is actually, not a conventional Fannie or Freddie, it's using the same guidelines. Same APR as it always has been, 7.992, but today it's even further down the list. Looks like it's in about 8th place today. So as conventional has improved, this option here for portfolio has gone down, but notice the price doesn't change. That's why it was cheaper for a while, and now it's a little bit more expensive as the conventional has changed quite a bit. Anyway, option here at the top, 7.374, strange rate there, for 3.5 discount points and costs. Put the final APR at 7.624 for the best option here for non-owner occupied investment property using conventional. So finally, some decent rates here for conventional. So those customers that want to use the full doc definitely welcome these changes to the rates. But most of our customers ask to compare a non-QM program for investments. So for our final demo, We want to pull up the same scenario. And this time we'll use our expanded guideline options. And the most popular income type for an investment property is our topic for today, DSCR. So that's because it doesn't require any employment or any income information from our borrower or any documentation on that from our borrower. We simply use the estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA, the monthly expenses of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.0 or higher. Even if the property doesn't quite cash flow on a ratio of 1.0 or higher, it's under 1, we still have options. For the demo, we always put 1.5 as the highest option so we can see all the programs. And finally, prepayment penalty must be selected. 3 years is standard for these programs. That will show the most options. We can select 0. That will limit what pops up, but also cost our customer more. 5 years will also, again, limit what shows up, but cost our customer less. So if your customer is flexible, check out those options. 3 years is the most common, so we can see all the programs pop up. So let's check out the DSCR rates this morning. Still DSCR almost beating conventional. Absolutely amazing here. 7.625 rate, 3.375 discount points at cost, plus the final APR 7.771. So close to conventional. 100% of investors will take a DSCR loan over a conventional when they're the same price. Today, they're the same price here. We were actually beating conventional for a while there. So definitely any investors out there, check out these DSCR options. If we scroll down here, there's a ton of different options too. Some of these at higher rates and costs may allow foreclosures, bankruptcies, other credit issues, may allow us to use short-term rental income calculations, may allow us to use other types of property that would otherwise be ineligible. We have condo hotels, mixed use, 5 to 8 units, all kinds of cool options here under DSCR. That is why it's our most popular program. And it is also our topic for today. So let me switch my screen again. And we do our live pricing every day for DSCR, but again, it's our most popular program by far. It's definitely probably the most popular program in the nation at the moment. As DSCR programs are expanding, most other programs are contracting, right? So not only do we love it, not only do our customers love it, but the markets out there, right? The secondary markets, the banks, the investors who are buying loans love in a volatile market to know that a property is going to cash flow and rent and cover the expenses of that property, right? Less risk of foreclosure. So these loans are very popular. Obviously, the over 1 ratio, right? We just talked about properties that cash flow over 1 are going to be the obviously better examples for DSCR. But we even have investors that are offering programs for under 1 ratio where the property may not quite cash flow. Typically, that's because they're using it for short-term rental. So hopefully the customer that's buying the property is still going to cash flow. However, for our metrics for underwriting the loan, it may not quite cash flow at a 1.0 ratio if we use long terms for the estimates. So a little bit of a general overview there. So Jose, I'm not sure what examples you have pulled up or tricks up your sleeve, but let's go ahead and check out the detailed DSCR examples if you're ready.
I think he's frozen.
right when it was time. Jose, you there?
Uh-oh. He might have to try to jump out and jump back in or something.
There he goes.
Now he's out.
Yeah. All right, give Jose a second to jump back in. I don't know which options he has pulled up, so I don't want to put any words in his mouth. But as I mentioned before, the DSCR, we have options for under 1 ratio, over 1 ratio. We have options for short-term rentals. We have options for mixed use, options for condo hotels, obviously options for 1 to 4 units is the most popular. But we also have options for small commercial, 5 to 8 units. So we've done some deep dives into those specific examples. Today, I think Jose just has some more general options pulled up for us. Hopefully he can get back in here. There he is.
All right, sorry
He
about
back?
that. Yeah, I had a little glitch in the tech here. So sorry about that. Let me share my screen. Give me a second here.
We can't really hear you. I think you got the wrong mic. Now we really can't hear you.
Yeah, mic is set correct. You should be hearing me.
No, we can hear you now. It's just a little muffled.
Okay.
There you go. Yeah, you're
Now
good.
you're on the right mic. Yeah.
All
All
right, let's
right. No,
go.
I just did a little realignment there. So sorry. All right. Let me. You guys got my screen right. Hold on one second. A minute. Let me get to the right screen here a second before you do that. Just needed to do a little alignment here. Give me a second. Because the last thing that I had just got kicked out, and it's the most important one that I wanted to put on my list. All right. So before I share, let me just let you guys know, a little bit of backstory on the DSCRs, right? Investment properties only, right? Because we do get every now and then a DSCR for a primary. You don't run DU on DSCRs either. All right, cool. Let me share my screen with you all now, and I got quite a few options to share with you all. Sorry for the delay. Now, our first one, 85% LTV DSCR purchase option, right? This is for one unit properties only. Do want to make you aware of that. 2 to 4 units do not qualify. I don't know why, because I would expect a 2 to 4 unit to have better rent, but that's just the way the guidelines are set up. Uh, Lowest cost option at par, 11.125, but you can buy that down all the way to 9.5%. So that's a pretty good rate, actually great rate, 85% LTV. Investment property, 1 unit purchase using only the cash flow from the property to qualify the borrower. So very amazing option there at 85%. Now, for our house hackers out there, for 2 to 4 unit, I ran this scenario as a 4 unit. Maximum LTV is 80% for the 2 to 4 unit purchase, right? So you do have, now you notice a difference now when you bring it down to an 80% LTV, which is more the norm for the industry. You have 9.125 at par, 8.125 lowest cost option. And I will state also no loan level price adjustments for the 1 to 4 unit when you're at an 80% LTV. So this is same as the 1 unit rate, 2 to 4 unit, which is amazing. Another amazing benefit of the DSCR program and non-QM in general, but specifically DSCR. So now I was mentioning the 1 unit, same rate you see right here, 9.125 at par, 8.125 lowest rate option for the 1 unit. Now, I wanted to add an additional twist here because all these examples I'm doing are with a 3 year prepayment penalty, which is pretty much a standard. You can go with a 2 year, you can go with a 1 year, you can go with no year, or you can go with a 5 year. Obviously, there's pricing differences at each of those intervals. Here, with a 5 year, same option, the rate drops by 0.5%. So if we look over here, it's 8.125 with the 3 year, and it is 7.625 with the 5 year. And just to let you all know, my purchase price I'm using is $500,000. I just had a question pop up there on our purchase price. So here I wanted to show you with the 5 year pricing is so good. Look at it, we got 8.5 with a lender credit. 8.375 still has a little bit of a lender credit. And then you can buy it all the way to 7.625, 80% LTV, DSCR, 1 to 4 unit purchase. This is giving me goosebumps here. Look at that, 80%. Amazing. Now, another mind blower, right? DSCR, 1 unit, no seasoning cash out, and I think this will apply to a 1 to 4 unit as well. No seasoning cash out refi 75% LTV with a 3-year prepay. This on this particular option, the maximum prepay is 3 years with this particular option, but cash out refi without a seasoning requirement, which will allow using the current market value. That's what I mean by no seasoning. I'm not talking about no, light on the salt and pepper. I'm talking about no seasoning on title, which will allow using the current market value with only 1 day on title. That's the only catch. You got to be on title yesterday, already, recorded, all that kind of good stuff. And today you can cash out refi. So that's a pretty good deal right there. 1 day on title on this 75%. And look at those rates, 9.625, only costing half a point. You can buy that down all the way to 8.25 with a 3.25 points. That's a very amazing rate for no seasoning. This is one of the best options out there. This is the one that the fixed flippers love, because this is the perfect loan to bring them quickly out of that fixed flip loan without having to wait for 6 months seasoning or 12 months seasoning, which tends to be the norm in a lot of the options out there for DSCR. And keep in mind, some of those fixed flip loans expire at 6 months and 1 day. So they got to wait for 6 months seasoning to be able to get the current market value on the house that they just rehabbed. They're going to be at a disadvantage. So this is the great program to put the fixed flippers into if they want to get the current market value at the shortest amount of time, because time is of the essence when they are looking to go into the next flip. They want to get that money back into their pocket to put it back into action. So very good option there. Now, as if that wasn't good enough, I got an 80% LTV, no seasoning cash out option. This one may be a little bit pickier with the seasoning. They say they don't have 6 months seasoning, but they're going to look at the work, and definitely the appraiser has to do their job, and the MLO has to do their job by properly submitting the scope of the work done when the order was presented. So here, 1.75 points to the borrower cost plus 1%. The pricing on this is 2.75 borrower paid to the borrower at par, but I've structured it here to compare it to the one that I just put. That was different structure on that. So same point structure there. Net 9.25, right? And this one was, if you're coming up here, 8.875. So yeah, a little bit of a difference, obviously, in the rate, but this is 80%. This is the unicorn right now in the industry with the investors, no seasoning, 80%. And we can do 5-year prepay on that as well and get even better pricing. But I wanted to compare apples to apples because the other one was 3-year. This one is 3-year, except it's 80%. And then I wanted to just show you regular, as if there's anything regular about DSCR, right? But after I'm blowing your mind with 80% cash out, no seasoning, here, this is on a 1 to 4 unit. I put 1 unit there because that's specifically how I ran the search. But in this case, it will not be loan level price adjustments to go to 2 to 4 units. Here, you're looking at 8.625 at par. You can see how much better the rate gets when we're in our more normal DSCR deal with seasoning. This one here requires at least 6 months seasoning on title to use the current market value. 8.625 is at par, and you can buy that down to 7.75 on your 75% cash out. And then last but not least, what I didn't put on there is that this is a 1 unit cash out refi of a no ratio 0.75 to 0.99 DSCR. And this product does cash out at a 75% LTV, which is actually the same LTV for this product as a purchase, by the way. We'll let you guys know. This is one of the few products I've seen out there that, for whatever reason, it's a very specialty product, has the same LTV for a purchase as it does for a cash out refi, which is pretty amazing. This is 75% LTV for your deal where the property does not cash flow at 100%. You're at a 0.75 to 0.99 DSCR. We can still do it. And you got 9.875. So this is not much of a different rate than the one we saw that was with no seasoning. And you can buy that down all the way to an 8.49% 8.49% rate. So very good options today. We're taking it back to the basics here with DSCRs because we're getting all this amazing movement in the rates. We're getting a lot of movement from the prospects out there, and we want everybody to be ready to properly consult with the best available options.
Love it. Love it. There were some questions. What was the purchase price? Jose already touched on that. He was using 500,000, right? And the next question was, can a DSCR be used to purchase a 2 to 4 unit with owner occupying 1 unit? We can't occupy at all.
But
not only can you not occupy it, your family members, your cousins, anybody related to you or your spouse, if any of those people occupy it for 1 day, that note will be called due immediately, right? Be very careful. You can't even Airbnb it to yourself, right? You can't even occupy it for 1 day. Be very, very careful.
But we did go over some great. We did go over some great 4-unit property options yesterday for your full doc borrower, and there are bank statement P&L options. For your self-employed borrowers that are primary or investment for.
And that'll be better rates anyway, right? Yeah. So you'd be better off, Leonardo, going that way.
And then Jason's just saying DSCR cash out, no seasoning. That's powerful. I guess more of a comment there, but yeah, for sure.
Can you touch on seasoning one more time, Jose? Just
correct. Okay. Seasoning now. Seasoning on title is basically referring to the amount of time that the current owner has been on the title of the property, has been the deeded owner of the property. So that seasoning on title will affect cash out refis, and seasoning on title will also affect purchases in the non-QM market, right? Non-QM, they're going to look at how long the seller has owned the property on a sale, and if it's less than a certain number of days, they're going to, depending on the guidelines, they're going to consider it a flip. Similar to FHA has their 90-day rule that before 90 days you can't go under contract for an FHA rule deal. So with the non-QM, it affects purchases, so you'd have to look at the guidelines, and it affects refis, cash out refis as well. So if you meet the requirement for seasoning for that guideline, then you will be allowed to use the current market value as the appraised value versus the other options, which then may be purchase price plus renovations or purchase price plus closing costs, depending how close you are to the actual date that the property was purchased. So be very well aware how that could affect your deals with 0 to 5 months and 29 days seasoning, 6 months to 11 months and 29 days seasoning, and greater than 12 months seasoning on title.
So the traditional seasoning, though, what is the conventional seasoning amount, which most people are used to? So for conventional loans,
12 months.
So to get full value of your cash out on a conventional program, 1 year and 1 day, right? You have to be 366 days after you purchased it the first time to do a cash out. Now the standard DSCR is typically what, Jose?
You're gonna now. I guess if we were to take a poll and put on a graph, who has 0, who has 6, and who has 12, I would say now the trend now has transitioned over to 6 months. I think is more the norm, but we still
only
have
DSCR though.
Yeah. We're talking DSCR here now. Yes, correct. But we do still have some options out there that are requiring 12 months seasoning on title. And then I covered the two options that we have here in our presentation that have no seasoning on title. So very few of those, quite a few of the 6 months, and still a few at 12 months. So be aware when you're looking at that great pricing on some of those options, look at the seasoning requirements. Now, again, other considerations on seasoning now when we are vetting our deals is seasoning of the assets. The same option that I provided at a 75% LTV now that doesn't have any seasoning on title for value also does not have any seasoning on assets for large deposits nor sourcing of funds. They just have to see the money in the account. So that's another additional great benefit of that option there. So seasoning can really mess you up. And that particular option also, since they are already being so flexible about seasoning, also allow full gift for assets for the purchase on an investment property on a
So
DSCR.
they'll basically do anything, right? Just give us
Yeah,
the loan, huh?
yeah. I mean, as long as you have the credit. Oh, and I mean, I'm gonna add even better. I mean, and there's more. you know, and there's more. They also allow first time home buyers and first time investors without having to provide a verification of rent nor payment history of any housing expense. So I mean, that's like the frosting on the cake there for DSCRs.
All right, we had one more question come in before we wrap it up here. Can title stay in an entity? I believe all those options require it almost to be in an LLC that we presented. There's only a couple options that actually don't want it in an LLC, correct?
Right.
Or an entity.
Correct. I mean, the borrower always will have the option whether they want to put it in an entity or not. And they definitely prefer it in an entity. But like you mentioned, a couple of the options out there will not allow vesting in an entity, and also will not allow prepayment penalties. So if you don't structure it properly when you're trying to look for the options out there, and you structure with an LLC and a prepay, you will never get those two or three options that don't allow it.
Most common option, but just be careful there.
Yes.
Bill.
All right. Cool. Great, great topic here for today. We love our DSCR loans. We'll be back here next week with a new topic. So thank you, everybody. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back on Monday with a new topic. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all on Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great weekend, everyone.
Thanks, everybody.
Thank you. Thank you, everybody. Have a great day.